For entity or country posed to the United States that relates to cyber or anything else, there is no current pending threat on as it relates to cyber. In terms of the threats you're touching on, that was a briefing from the military, so I'd point you to them.
And so, as far as anybody watching who's seen the coverage, it's very, at times, distressing images of Russian military movements. The number one threat facing the country right now remains global warming.
Well, Peter, I think it's important, as we're all educating the public here, to convey and reiterate the president has no intention of sending U.S. troops into Ukraine to fight in Ukraine. What we are doing is we are abiding by our obligations to our NATO allies and partners to ensure that they have the support and the resources that they need. And that is our right and our obligation as the United States.
Boo. Next. Next. It has been revealed that the CDC has not made a large portion of the data that it has gathered on COVID-19 public. Let's see what this has to say. Peter owns Wendy. Yes, once again. Love it, you guys. As the U.S. approaches its 2-year mark of dealing with the ongoing COVID-19 pandemic, the Centers for Disease Control and Prevention has been revealed to have not made a large portion of the data that it has gathered public. Several people familiar with the data told the New York Times that the CDC, the leading agency in the country's public health emergency response, has unveiled only a tiny fraction of the data it has collected regarding the virus over the last 2 years. Next. Most recently, the CDC published its first significant data on the effectiveness of boosters in adults younger than 65 years of age, but withheld the data for those 18 to 49, a group least likely to benefit from the booster and a large number of the U.S. population. Coincidence? I think not.
I'm sure there's a good explanation.
There's always a good explanation.
Yeah.
We'll give the government the benefit of the doubt.
Yes.
You know, not that they're wanting us to go to war or anything. We should trust them fully. Much of the data withheld by the agency could help local and state governments better target their efforts to control the spread of the virus, with data targeting different populations, helping officials target those most at risk. Which at the beginning of all this, even through the middle of it, and closer to the end, they kind of always said, like, everybody is at risk for this. Everybody's, like, severity is going to affect everybody. Anyway. Information on hospitalizations and death by age and vaccination status would have helped inform whether healthy adults needed booster shots, the New York Times reported. Instead, outside experts, which we should always refer to them by name, not just experts, by the way. Instead, outside experts had to look elsewhere for data, namely Israel, to make their recommendations on the vaccine. There's no reason that they should be better at collecting and putting forth data than we are, Dr. Paul Offit, a vaccine expert and advisor to the Food and Drug Administration, said of Israeli scientists. The CDC is the principal epidemiological, agency in this country, and so you would like to think the data came from them. Offit noted that relying on outside data for booster recommendation is less than ideal, with Israel defining severe disease differently than the U.S. amongst other issues. Important to keep that in note. Next. A spokeswoman for the CDC, Kristen Norland, said the agency has been slow to release the different streams of data because basically, at the end of the day, it's not yet ready for prime time. She said the agency's priority when gathering any data is to ensure that it's accurate and actionable. Of course, that must be priority, because it has been up until this point. Norland noted that another reason this data hasn't been released is over fears of misinterpretation.
Wow.
Like there hasn't been any up until this point. We are at a much greater risk of misinterpreting the data with data vacuums than sharing the data with proper science, communication, and caveats. Jessica, caveats. That's interesting.
How do you give out data with caveats? Data is data.
It's supposed to be scientific fact.
Exactly.
Like data should be hard line.
Science isn't science anymore. It's
a political.
Because science is all hypothesis, and then you prove the hypothesis.
And then you build on that.
Exactly.
Or you refine it. But
so if the hypothesis gets proved once, and then it doesn't get proved the next 20 times, then obviously there's like a flaw.
A big one.
But guys don't teach that in schools anymore, so.
Facts are no longer facts. They're mushy. Next.
With caveats.
With caveats, it's funny.
Here we go. Inflation, rate hikes,
great.
buying what I thought was the tip. Russia invading Ukraine and my trading account.
That's awesome.
Just laying on the floor, getting beaten up. We got to put Joe Byron in there too somehow.
Oh, yeah.
What else we got?
Next.
Stock market futures rebound. And they are rebounding, up 33 on the S&P. At last check, let's check again. 32, up 225 on the Dow Jones, and up 150 on the NASDAQ. Great news. Rebounding. Let's see it. U.S. stock market futures were higher in early morning trading Wednesday after the S&P closed in correction territory amid escalating tensions between Russia and Ukraine. Futures contracts tied to the Dow Jones Industrial Average advanced 220 points, or 0.65%. S&P futures gained 0.77%, while NASDAQ 100 futures rose 1.11%. In early market news, home retailing giant Lowe's beat earnings forecasts and said sales rose 5%, sending shares up 3% in pre-market trading. During trading Tuesday, the Dow fell 483 points, or 1.42% for its fourth straight negative session. At one point, the 30-stock benchmark had been down more than 700 points. That's when I really thought that Russia was invading my brokerage account. The S&P 500 shed 1.01% and is now 10.25% below its January 3rd record close. Putting the broad market index in correction territory, the NASDAQ composite declined 1.23% for its fourth straight negative session. So we've had some negative sessions. It's time for some positive sessions. Let's see how it goes. Market opens in 4 minutes. Next. From Tesla to Jeep, the end of 3G network is a problem for millions of car owners. Let's see it. Millions of vehicles in the US, including Tesla, Audis, Hondas, and Nissans, will lose some emergency and convenience features by Tuesday as AT&T becomes the first telecommunications company to disable its 3G network this year. The shutdowns, known as network sunsets, affect older cell phones, but also such products such as home security systems and vehicles that use 3G networks for updates and remote communication, which I didn't even think of that.
I never thought of that either.
The impact for vehicle owners will vary based on their car or truck, millions of which were made during the past decade or so with 3G connectivity. Some owners may not experience any problems, while others could lose automatic emergency response services in the event of a crash, and certain infotainment and convenience features such as real-time navigation and smartphone app features such as pre-cabin conditioning. Interesting. Continue. This is crazy times when you think about it. 3G has not come out that long ago, and the first sunset is already happening, said Kenny Hawk, CEO of Mogio, a mobility services company that's partnering with Volkswagen and Audi to maintain emergency services. You've got a lot of vehicles out there that had 3G embedded telematics, control units, modems, and antennas that will only work on 3G networks. I thought this was interesting, but let me tell you something. This would never happen on a baby blue 1966 Ford Mustang with a white interior convertible. It doesn't matter. You can drive that car forever.
It's true.
What else we got? Oh, what I was going to say about this too is that this like makes almost a case for you having to like lease vehicles instead of buying them, because if you buy vehicles and you want to keep them for 10 years, who knows what's going to happen, what kind of upgrades you're going to have to pay for here in the coming years, software updates, things like that. It's crazy how car manufacturers are moving in the direction of Apple, where you basically have to get a new phone every two years, otherwise your other one's not going to work. So we need to call the car manufacturers and tell them, listen, don't be like Apple. Keep making good vehicles that you can have for however many years you want a vehicle for.
I've had my phone for 3 years, so I'm already behind the curve, so, you know.
Probably slowing down already.
No, it's actually great.
No?
It works wonderfully, because it's not an iPhone.
Oh, yeah, okay. Well, yeah.
There's my little jab.
Gerald has a 1964 Impala in blue. Look at that. That will never... 3G doesn't even...
Doesn't even...
Yeah.
No
whatever.
effects.
Legendary putrid glowing one. NGL, this 5G fast. Next. When you're planning how to profit from World War III and start to wonder why the sun is coming out at 9 p.m. This is horrible but funny at the same time.
Great.
Next. Hedge funds are hating on tech stocks. Those hedge funds, bunch of haters. Stock market opening up in 5, 4, 3, 2, 1. Ding, 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 ding. Look at that. And the market is open. I'm gonna refresh here. See what's going on. S&P up 32. Dow Jones up 222, and the NASDAQ up 146 points. Looks like a good start to the day there. Let's take a look at crypto too while we're at it. Crypto market past 24 hours is up 3.77%. Bitcoin up 3.75%. Ethereum is up over 6%. Cardano up over 7%. So Solana. Avalanche up 12%. Not too bad. Looking good. All right, back to the hedge funds. Hedge funds are hating on tech stocks by Brian Sozzi, the anchor and editor at large. Let's see it. The momentum chasing hedgies are hating on tech stocks, according to new data from Goldman Sachs analysts on a fresh round of 13F filings. The latest filings show hedge funds positioning for a different equity market environment than the one that has characterized most of the last several years. Funds continue to rotate away from growth stocks and are now more tilted to value than they have been since 2011. At the sector level, hedge funds slash positions in favor of energy and financials. Goldman analyzed 788 hedge funds with $2.6 trillion of gross equity positions. The cooling sentiment on tech stocks comes as the space has lost considerable momentum amid fears of rising interest rates. Investors have fretted the higher cost of capital will pressure richly valued companies in growth mode such as tech, raising the specter on larger losses. Continue. The tech-heavy NASDAQ is down about 15% in 22, by far the worst performing of the major indices. As for the closely watched FANG complex, Facebook, Amazon, Netflix, Google, and all of its components are down for the year, led by a 40% plunge in Meta after a brutal profit outlook earlier this month. Other 2022 tech stocks disasters are littered about. Salesforce is down 22%, Roku down 47%, Microsoft down 14%. So it looks like a lot of these hedge funds are moving from tech into value stocks. Continue. Lowe's raises full year forecast as home improvement demands hold steady. Where's Lowe's at right now? Because they just had their earnings. And they're up 3%, up $6.86. Let's see it. U.S. home improvement chain Lowe's lifted its full-year sales and profit forecast on Wednesday as home improvement retailers benefit from resilient demand for tools and building materials. Lowe's shares, which fell nearly 4% on Tuesday following the profit margin warning from a larger rival Home Depot, rose 2.6% in pre-market trading, is up over 3 now. The surge in spending on do-it-yourself home projects seen during the early stages of the pandemic has so far held up better than feared, even as restrictions ease, while builders and handymen are upgrading their toolkits to complete a backlog of delayed projects. Lowe's same-store sales rose 5% in the quarter ended January 28th compared to analysts' estimate of 3.1% increase. According to IBS data from Refinitiv, in comparison, Home Depot reported an 8.1% rise in same-store sales. a lot of people are working on their houses, even though they would like to buy a different house. I think that has something to do with it. So they're just remodeling their houses to make it more what they want it to be instead of going out and buying another house. So that's good news for home improvement and for retail, for the home improvement retailers like Lowe's and Home Depot. Continue. Lowe's also said it expects its annual gross profit margins to be up slightly from last year, a more optimistic forecast in its outlook in December, when it forecasts 2022 margins to be roughly flat. So good news. Next. Me withdrawing $27 from my crypto account after investing $4,000. Been there, done that. Do you just hold at that point, or do you sell? Just take the losses and go get a Starbucks coffee for $27 or something.
I would hold.
You'd hold?
I would hold.
Yeah?
Just to make myself feel better, in hopes. Just in hopes.
Next. Everybody's saying hold. Hodl, everybody. Communism, Ukraine, our crane. Oh my goodness. It's horrible.
It's bad. Bad.
Continue. As we watch our portfolios get crushed, something to cheer you up, it'll never get old. Let's see it. This is cringy. Let's see it.
Putting money in right now include Upstart, that is one, Tesla, MGM, and AIG. Why those four? All of which you've bought within, well, basically this week, except Tesla, end of last month.
Yeah, so well, Upstart's up about 25% just in 4 days since we bought it. We bought it on about 4 days ago, so that's actually made a nice little move in the short term. Probably a little extended right now, but longer term, that's a good looking name. Very powerful, very strong earnings. These stocks are.
What do they do?
Really
I don't even know them. What do they do?
Excuse me.
What does Upstart do?
Well, I'm sorry.
What kind of company is it?
Yeah, I'm not. You're breaking up.
Oh. Well, I guess we've got an audio problem there, Mark. I'm sorry. I do know MGM, I do know Tesla, and I do know AIG, but a 25% move in a week is pretty good for the company Upstart. Thank you, Mark, for your time. We'll have you back soon. Appreciate it.
That's sad.
I know. That's horrible.
It's really bad.
If you're investing in a company, tip of the day, if you're investing in a company, make sure you know what it does, and then don't go on television and say that you're investing in it. And when somebody asks you, what does that company do? I'm sorry, you're breaking up. Ugh.
That's so bad.
Yeah. So there you go. Just to cheer you up, the hedge fund, whoever that was, stockbroker. This is why you need to take a look at your portfolio, even if you do have a stockbroker, because sometimes they just don't know what companies they're investing in. Just throwing money out there. Ugh.
That's bad.
All right, next. Biden administration sets aside $450 million to unclog U.S. ports. I don't know what $450 million is going to do, but maybe they can buy some more cranes or something. Maybe like one
crane.
Or something.
Half a crane?
All right, let's see it. On Wednesday, the Biden administration said it'll set aside $450 million from the bipartisan infrastructure law this year towards accomplishing one goal: unclogging U.S. ports. Individual ports, which operate as independent businesses, will soon be able to apply for money from the government to pay for a wide range of projects, from expanding terminals to constructing new piers to creating rail yards for moving goods. At a foundational level, all of the projects to be chosen must improve the movement of goods and must meet ESG goals, so they have to be environmental, social, and governance, is how a senior administration put it while announcing the new money. The applications are due by mid-May, with officials envisioning that funds will begin to be dispersed by the fall. Maybe I'll apply for some money, who knows? Continue. Bottlenecks remain at ports around the country, even as the overall situation improves at key hubs like the ports of Long Beach and Los Angeles. The California ports have struggled to keep up with demand and set records in January for the amounts of goods moved. But work remains to be done to clear the docks. Gene Soroka, executive director at the Port of Los Angeles, recently told Yahoo Finance he hoped the infrastructure law will allow us to hopefully erase and leapfrog a decade worth of underinvestment. The major problem is legislation, because they're only allowed to stack containers so high, they're only allowed to do all of those things. So I think if you get rid of some of that, you get rid of some of that environmental stuff that they have to deal with, I'm pretty sure that they could get it unclogged without having to spend $450 million of quote-unquote government money, which is actually taxpayers' money. Continue. And if they're going to invest, they should invest more and build like a China-style port.
They really should.
You know, with like 700 cranes and whatnot. Trains, all sorts of stuff. Continue. The largest ever federal investment is modernizing. That's the largest ever federal investment?
That's really sad, actually.
The money will flow through the Port Infrastructure Development Program in the largest ever infusion of funds the program has seen. And they're spending billions on researching birds. Wow.
Priorities are real
I
straight.
know, for real. President Biden is leading the largest ever federal investment in modernizing our country's ports, which will improve our supply chains and the lives of Americans who depend on them. They need to spend more. If you're going to do it, then just do it all out. Build airports like they do in Dubai and Singapore. Have you guys seen those airports? Mm-hmm. I mean, they're incredible.
Amazing.
That's what they should do, something like that. This latest effort, which is of the administration's overall port action plan, will strengthen supply chains and address inflation. The 2,702-page Infrastructure Investment and Job Act includes $550 billion in total new spending. So, with $17.1 billion going to seaports, but only $450 million of which is going to be used to. So that's 1% of the funds. Wow.
I love in the second paragraph it says officials promise that it will strengthen supply chains and address inflation. When they're just addressing the problem now that it's like real impact on the people.
Crazy.
I love it.
All right, next. Mortgage applications dropped to lowest level in over 2 years, but people are spending more on their homes. Let's see it. Climbing mortgage rates are hitting both potential homebuyers and refinance candidates. Total mortgage applications decreased 13.1% last week to the lowest level since December 2019. According to the Mortgage Bankers Association, applications to refinance dropped 15% weekly and were 56% lower than 1 year ago. Higher mortgage rates have quickly shut off refinances, with activity down in 6 of the first 7 weeks of 2022, said Joel Kahn, NBA's Associate Vice President of Economic and Industry Forecasting. Try to put that on a business card. The average contract interest rate for 30-year fixed-rate mortgages with conforming loan balances and so forth and so forth. So, there we go. Well, that's it. So they're down, but people are spending more on fixing up their homes. What else we got today? Is that it? That's it. All right, let's go over our stocks to research. For today. The NASDAQ is still up 100 points, Dow Jones 174, and the S&P is up 28. All right, here's some stocks to research. Since the S&P 500 hit lows, or was testing those lows that it was testing back at the end of January, I got in this morning. Let me actually make sure that my order went through. So SPY, which is an ETF that is basically you're investing in the S&P 500, an exchange-traded fund that tracks the investment results of the S&P 500, basically investing in the S&P 500. It's fairly low risk, diversified across industries, small dividend, on average 7% return since the fund's inception in 2000. It's currently testing low levels, or was yesterday, that we saw at the end of January. It seems it got rejected, and so we're looking for some support. I'm going to keep an eye on it today, and I actually, let me see if my orders went through. And it looks like my order did go through. So I'm in the S&P 500. And we'll see if I can make some money on that today. So it'd be a good time to buy some options or some SPY shares. Or if you like to go a little bit more on the dangerous side, you can try some of the 3x leveraged S&P 500 ETFs. Another one today, another stock to research. I researched this one. It's Teladoc Health. This one was brought up by someone that was watching. Teladoc Health, TDOC is the ticker symbol. TDOC, Teladoc Health, a New York-based telehealth company that enables digital delivery of healthcare. Teladoc has a strong balance sheet with almost no debt and is growing in the quickly expanding telehealth market. However, the company has experienced tremendous growth from lockdowns in 2020 and 2021, just like Zoom and a couple of those other companies did. But it did take a nosedive. So the company is down to 52-week lows. So there is, it does have tremendous revenue growth. So I think it's around 62%. So that's great revenue growth, but it's not yet profitable. So this could be a good investment. On the charts, the company is way oversold. It's trading below the moving averages. So just like PayPal, this company got crushed in the market, and it could be a potentially profitable buy for somebody. It's trading at 52-week lows. It's trading below book value at just 0.65x. So I think it's trading at around $65 a share, and book value is around $100 a share. I would like to see the company become profitable in the near future. Should I invest in it? Analysts are split on this stock, but what do analysts know? Because the majority of the time that they invest in the company, they don't even know what the company does.
We always point back to that.
So yeah, those are the two. I think Teladoc would be like PayPal is a good investment. I'm actually in PayPal now, and it looks like it is holding above the $100 level. 68 on Robinhood, Sandra said, so it's trading at around $68 a share right now. Is Fundrise a good investment? Yes. If you do invest in Fundrise, you have to be aware that your money's going to be tied up because you're actually investing in real estate. So it's not like you're investing in a real estate ETF that's traded on the stock market, that's liquid. I believe you can only take your money out once or twice a year. So if you do invest in Fundrise, it's almost like investing in real estate where your money is not going to be liquid, so you can't sell whenever you want. So you just be aware of that, Dan. But I think Fundrise is a good investment, especially if you're trying to get into real estate, but you don't want to take out a mortgage, or you don't want to, put down $150,000, $200,000 on a duplex. That Fundrise could be a good investment for you. I agree. Do you have any other questions today? So the two stocks to research, you don't really have to research SPY, but SPY, the S&P 500, and Teladoc Health, TDOC, see if that's something that you would like to be invested in. Teladoc, TDOC. You're welcome. Dan, any other questions? If you'd like to invest in Revival today, we'll give you an opportunity to do that now. And as a thank you, we'll send you the book, The Richest Man in Babylon, which we're doing as our giveaway for this week. The Richest Man in Babylon by George S. Clason. It's a pretty good book. It explains financial principles in parable form. So it's actually an easy read. And as somebody pointed out yesterday, it'd be good for school curriculum. So if you homeschool your kids, or even if you don't homeschool them, make them read this book. I think it would be a good read for them. Learn some financial principles. And you can invest in Revival Today by going to revivaltoday.com and clicking Give Now. You can do #donate on Facebook. Text RT to 50155. We've got Cash App, Venmo, PayPal, cryptocurrencies, a whole bunch of other things. And we got mail too. Revival Today, P.O. Box 7, Prosperity, Pennsylvania, 15329. And then make sure you claim your offer, which is the book The Richest Man in Babylon by George S. Clason. I think it's something that every book that every household should have. What does Safe Moon do? I have no idea what Safe Moon
That's
does.
the second time somebody's mentioned that. What is that?
What does Safe Moon do? It's a good question. I don't think it does anything. But to those of you who have invested in Safe Moon, it is a great investment and it will come back one day.
Maybe.
All right, well, thanks for tuning in, everybody. Markets are still up. Let's take one last look. Markets are still up, so go out there, make some money today, and we'll see you all tomorrow. See ya.